It's the word that everyone hates, taxes. But it is something that we've got to do. Now, 2021 has been the year of NFTs, and if you're watching this video, well, you've probably deep dived into the world of NFTs, probably bought some, and even sold some. But in all the fun of the NFT community, what you don't want to do is get stung with a massive tax bill at the end of the year. Now, if you're a friend across the pond in the US, then this video is totally for you. Because everything that you're going to be learning in this video isn't just going to help you now whilst you're frantically trying to sort out your taxes, but it's actually going to be advice that's going to help you be more organized for the tax year to come. Oh, and don't worry, this isn't just my advice, because I've actually brought in an IRL professional who actually knows about all this stuff. Now we're going to kick off with what is actually taxable. Is it the asset itself, or is it actually what you use to pay for it?
It's taxable if you used cryptocurrency to purchase your NFT. And the reason that that's taxable is because the IRS, the tax authority here in the States, classifies cryptocurrency as property. And so the tax implication actually comes from the underlying crypto that you're using to purchase the NFT. And so the tax that you'll owe is capital gains on the underlying crypto that you used to make your NFT purchase.
So there is some good news. If you decided to pay for your assets in fiat and not in crypto, you're not going to be subject to this.
Conversely, though, if you use US dollars to purchase an NFT that's not a taxable transaction, I know there are a couple of platforms that allow that. I've tested that out myself. So if you use fiat currency to buy your NFT that's not taxable, but if you use crypto, you'll likely have capital gains tax owed.
So you may have been thinking, well, hang on a minute, I've been sat there with my moon bag for quite some time with this little collection of ETH, and now you're telling me it's getting taxed on it?
Right. So like most investors, you've probably dollar cost averaged your way into purchasing and acquiring a pot of ETH to then use for an NFT purchase. And so if that's the case, then you've purchased ETH at varying valuations throughout, the course of the year, for example. And so when you then use the ETH to purchase an NFT, the IRS views that as a simultaneous sale of ETH and purchase of a new asset, which is an NFT. And the increase in value of your ETH, which is called your cost basis versus your eventual sale price, that gain or loss amount is what will trigger capital gains. And so calculating the gain is a bit more complex. There's a couple of different methods you can use, but it's just good to be mindful that if you're using crypto, you've likely acquired it at different valuations, and there's probably a value increase in the case of Ethereum. And so just good to be mindful that if you're using crypto to purchase an NFT, you might have capital gains tax implications. And so don't blindly make those purchases assuming that just because there's no fiat changing hands that there's no tax to be owed.
Now, it's all well and good knowing that you have to pay capital gains tax, but actually what you might be thinking is, how much is that exactly? How much do I need to put aside in order to stay organized?
Yeah, so in the US, capital gains tax, there's two classifications, short-term and long-term capital gains. Short-term capital gains, it's probably going to apply to most of our NFT transactions and crypto purchases. That's if you've purchased and then resold the crypto within a 12-month period of time, then your short-term capital gains rate is the same as your ordinary income tax rate. So that's fairly easy to remember. And a conservative amount you could put aside is about 30%, just to sort of cover yourself. Just earmark 30%. Okay, I'll probably owe tax.
Yikes, 30%, and that's just for holding the NFT. You might also be thinking, what if I sold that NFT in the last 12 months? Kate, does that change anything?
Similar to using crypto to buy an NFT, we have capital gains implications for an NFT resale. So if you've purchased an NFT within the last 12 months, and then it's gone up in value, you had paper hands and you sold, and you've got a gain, most likely a gain in value on that NFT purchase, you'll have capital gains tax implications as well. So short-term versus long-term. Long-term, again, is 12 months and 1 day. If you held on for 12 months and 1 day, you'll fall into that long-term capital gains bucket, which is generally speaking a more advantageous tax position to be in. The long-term capital gains rates are lower. So if you can hodl just for 12 months in one day, you'll likely be in a better tax position.
Okay, so the good news is that the taxable amount you're going to have to pay on the NFT that you sold is only on the amount of profit that you make, not on the whole amount. That's right, isn't it, Kate?
Correct. So it's just the gain, exactly. It's just the profit, so not the total amount you received when you sold the NFT.
So I hope you'll agree that that's actually pretty good news for a lot of you out there. Now, let's move swiftly on. Now, if you owned a utility NFT, you may have been sent something like an airdrop or been part of a giveaway. Now, if you didn't think you'd have to pay tax on that, well, maybe you have to think again.
Fortunately, in the US, the IRS did come out with a brief paper on this topic, and yes, airdrops and giveaways are going to be taxable in the US at your ordinary income tax rate. And so the tricky part of a lot of the airdrop giveaways is actually what's the valuation that we can place on these either NFTs or crypto tokens that are being airdropped? Because if you're airdropped a well-established NFT project that has a floor price that we can reference for fair market value, for example, determining the USD equivalent value of that asset that you were airdropped is easy. But if you're airdropped a project that maybe isn't as well known and doesn't have, sales history and a floor price, then that's when you'll need to speak with a professional to come to a USD equivalent valuation to then determine the tax that you'll eventually owe. But the important thing to know here, the takeaway is your airdrops and giveaways will be taxable, and just earmark ordinary income tax rates, and we'll need to determine the USD equivalent value of the airdrop you received.
Now you might be thinking to yourself, hang on a sec, I didn't sell that NFT that I received in the airdrop. Surely I won't have to pay tax on that. Well, think again.
Just due to the fact that you received the airdrop is enough to trigger tax. And so the IRS views that as a prize or giveaway. So you're receiving something of value, and therefore in the US, you'll owe tax on that.
Okay, so not such good news if you received an NFT in an airdrop, but let's try and brighten up your day just a little bit. Let's move swiftly on to the world of gas fees. Gas fees can cost you quite a lot of money and can be really, really annoying, especially if you're on the Ethereum blockchain. So I'm hoping that actually someone will give us a bit of a break.
As an investor or collector, the gas fee amount and any other transaction fees that you incur are added to what's called your cost basis in the NFT. So when you purchase the NFT, you have your purchase price, say 1 ETH for simplicity, and then you might incur $100 in gas fees on that transaction. And so your cost basis in the NFT becomes the USD equivalent value of ETH at the time you purchased it. So let's say 4,000 US dollars plus $100 in gas fees. So your cost basis is $4,100. And the reason that's important is because later, if you decide to resell the NFT, then your gain, which we talked about earlier, the profit amount, is going to be reduced by that $100 gas fee. So by including the gas in your cost basis, you're later reducing the amount of capital gain. It's beneficial eventually, just not immediately, but it eventually does pay off.
Well, beneficial in the long run is certainly better than not beneficial at all in my book. Now, you've heard some great top tips from Kate there on what to do during the tax season, but one of the biggest things that you can do is start to think differently about planning ahead. So to round off the video, Kate's got some top tips to help you stay organized and get yourself in a good position for next year.
If you're listening to this and you're in the US, most people wait until January or February when they speak to their accountant, have an understanding of what your tax liability might be. Most people wait until January or February when they speak to their accountant to even get a basic understanding of some of the tax they might owe. And at that point, it's too late to make any changes. The year's already been closed. And so if during the tax year, you can obtain an understanding of what your capital gains tax liability might be, for example, you still have a window of opportunity to do some tax loss harvesting, for example, to try to reduce some of those capital gains. If you know you've got a lot of income for the year. You could make some charitable donations or retirement plan contributions. There's always ways that you can go about reducing the tax that you owe, but you can't do that if you don't know what your tax position is prior to the close of the tax year. So if everyone listening could at least walk away with that tip, let me just get my arms around what my tax liability might be before the close of the year, that'll serve you so well.
Well, there you have it. If you were pulling out your hair when it comes to your taxes, then hopefully this video has given you a little bit of peace. Huge thanks to Kate for all of her tip-top knowledge, and don't worry, she's not going anywhere. We're going to get her back for many, many more videos on tax. But if you need some help with your NFT journey, don't forget to check out these videos as well. They're there to help you. We hope it guides you along the way. And thank you for watching. We'll see you next time.